it's all very clear that this tariff stuff is very disruptive. And how could it not be? That Canada and the U.S. have the largest, trading relationship in the world between two countries. Of course, if you slap a 25% tariff on most of the goods crossing the border, you're going to see a massive disruption, and that's what we're seeing. And so it's almost as though he's doing it on purpose, trigger the recession now, clean everything out, get the tariff set up, and come out for the boom. And their messaging is certainly consistent with that. So it's interesting to see how it all unfolds.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for March 10th through March 17th, 2025, while supplies last. First this week, we feature backdated 1-ounce gold Krugerrand at just $59 over spot. Next, Valcambi silver kilo bars are just $2.20 over spot per ounce. Pre-65 mixed junk silver is just $1.99 over spot, and pre-65 half dollars are just $2.25 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is Doomberg, one of the most popular financial substacks. Doomberg, thank you so much for joining us today.
Elijah, great to be back with you. Always enjoy our discussions.
Well, it's great to have you today. I did want to discuss what happened, I think it was just last week with Trump and Zelensky, the president of Ukraine, the meeting there also with Vance. It made a lot of good TV, because of kind of the shouting match. But I guess your perspective on all of that and how it's, in your view, it seems like it's really achieving Trump's final objective anyways.
So I think if we think about the Ukraine war, and we just published a piece not that long ago, which generated a wave of surprising comments. We've been following the Ukraine war very closely for over a year now. We wrote a piece called Mapping the War last year. And it turns out there exists an enormous amount of open source intelligence for any unbiased observer to be able to track what's going on down to the line of combat contact and casualties and things like that. And we've been doing that for the better part of the year. And two things we sort of concluded is, one, the war is lost. NATO has lost the war with Russia, and make no mistake, it is a war with Russia that NATO is fighting through a proxy. When we say such things, it angers Ukrainians, and it should, but it shouldn't anger them that we're saying it. It should anger them that they were put in that position in the first place. And then the second is there's an amazing propaganda bubble around the war, especially in Europe and Canada, less so in the United States, where saying something like the war is lost is so incongruent with what people are swimming in every day that it also angers them. And so if you have been following the war as closely as we have, and by the way, like the major source of information is actually Ukrainian based. It's an online mapping outfit called Deep State. If anything, it is biased towards Ukraine. And if you just look at the change in the maps in the past year, you can see the direction of travel. It's one way. So if you really know what's going on and that the war is lost, Trump's behavior is totally rational. Like, how do we end this war, recoup some of our losses, stop the killing, which is laudable? And he is correct that we would have never gotten into this war if he was still president. I mean, I believe that to be true. Again, another controversial statement. But Zelensky is not in a position to end the war domestically. There's a lot of intrigue and power dynamics inside Ukraine that just never get published on in the Western media. And he isn't actually looking for a ceasefire or peace, which is why the meeting in the Oval Office blew up. But the Europeans, having told themselves these lies so often, they begin to believe them. And they've been thrown into an incredible frenzy, the likes of which we frankly haven't seen. And then last point I'll make is we're putting out a piece shortly after we record this interview where there's an interpretation of these events where suddenly Europe rearming itself is exactly what Trump wants. First of all, they're not going to be able to rearm themselves on their own and to any meaningful extent. It's not really going to impact the war. By the time they spool up all of this military spending, the war will have long since been over. If not through negotiation, then through military imposition. But ultimately, if Trump is looking to cut fiscal spending, can't really meaningfully impact the deficit without taking on the military, getting rid of all the fraud and waste and mismanagement in the Pentagon. Having a fresh multi-$100 billion bidder for what amounts to U.S. weapons might come in pretty handy in the years ahead. And so I know that's a lot, but that's sort of our overarching view of the war, the propaganda, and what Trump might actually be up to.
Now, how does this impact geopolitical tensions, and also what are those impacts then on the market as well?
So I think there's actually a bullish case to be made that Trump is seeking to strike an overarching deal between what are now have to be characterized as the sort of the three superpowers: Russia, China, and the United States. And again, if you've been swimming in propaganda, you would never consider Russia a superpower. But look, they're the second largest producer of commodities in the world. They have the largest standing army at the moment. Some would argue the strongest, and they certainly have the largest fleet of nuclear weapons and the most sophisticated fleet of nuclear weapons in the world. And frankly, they defeated us in the sanctions war as well. They have a self-sufficient economy. They grow their own food. They make their own stuff, and they have a really great trading relationship now with China, which is a catastrophe for geopolitics for the U.S. And so the U.S. is coming to the grand bargain from a much weaker position than it would have been if it hadn't suffered the military defeat on the ground in Ukraine that it has.
So it seems like then we're moving towards, as we've talked about before, kind of a multipolar world. How does that impact the dollar in this case?
I think the dollar will be fine. The multipolarity and the definition of that term is different depending on which of the superpowers you're talking to. I think Russia and China would view multipolarity as sort of no dominant spheres of influence, whereas it's very clear if you listen to Marco Rubio and even Trump, they're willing to cut a deal with Russia and China, but they want the Western Hemisphere as their sphere of influence, and clearly Trump is making aggressive and some would say highly inappropriate moves towards that end. Trying to purchase Greenland, the trolling he's doing with Canada and Governor Trudeau in the 51st state, the Panama Canal, the tariffs on the two largest trading partners, and so on. There's going to be a lot of friction coming up in the Western Hemisphere, but that's Trump's view. I noticed he was posting on Truth Social just yesterday about basically bribing the citizens of Greenland to consider joining the U.S. I thought it was interesting and borderline inappropriate that he said, Greenland will become part of the U.S. one way or the other in his speech, his address to the joint Congress. So there's lots going on. It's dizzying, really, is part of the classic Trump strategy and tactics. But when Marco Rubio says multipolarity, that is a vastly different definition than what China uses. China is thinking that the global South should each have, all the countries in the global South should have an equal voice. That why does the UK or France have a bigger voice than, say, Brazil or India? Those are sort of hangovers of colonialism that much of the world would like to see wiped away. It's unclear whether the U.S. is willing to go that far. But at least now we seem to be taking concrete steps back from a trajectory that would have landed us in World War III.
Because that's the concern that a lot of people have is this meeting, now we're going to have World War III, right? Trump is just kind of playing with World War III, but you think that's not really a high probability at the moment?
Well, he's doing the opposite. I mean, it was Biden who was authorizing the launching of long-range missiles into, old Russia, as we might call it. So far, it's so deep inside of Russia that nobody could argue credibly that isn't Russia. If Russia, through a proxy, was launching missiles into, Iowa, I think we'd have a pretty substantial reaction to such a development. And since Trump has come into power, all those missile launches have stopped. They couldn't have been done without U.S. military intelligence, and the Russians would say without direct involvement of NATO soldiers. And he's put a stop to all that. Now, who knows if Zelensky had put on a suit and signed the mineral rights deal, and the Russians just ignored all that and kept going, whether Trump would escalate. That didn't happen. I think Zelensky made a catastrophic error. And now the Europeans are doubling down on that error. But it is what it is. I mean, this is the sort of the pieces on the board. You have to analyze them as they lay.
Definitely know with respect to the gold market, there's been a lot of talk about potentially gold revaluation, right? Scott Bessent has explicitly said that's not what he was talking about in the Oval Office, but there's a lot of speculation that could happen, and also auditing of the Fort Knox gold reserves. Your perspective on this, maybe this highlighting of a gold that seems to be maybe rumored in this new administration.
Yeah, we've got caught up in that a little bit earlier this year, but having studied the situation closely, and we're publishing on this tomorrow, we have a slightly different interpretation. We think that the creation of the crypto reserve, the Bitcoin reserve, the digital Fort Knox, as he called it, and the planting of the seeds of doubt around whether the U.S. actually has its gold serves two purposes. One, you can't participate in crypto. I mean, you can, but the most common way people on-ramp into crypto is they buy a stable coin, and then they use that stable coin to buy their Bitcoin or buy their, whatever, cryptocurrency is out there. And the stable coins are invested in short-term treasuries. And they're a natural sort of steady bid for short-term treasuries. And the U.S. has a lot of short-term treasuries to roll over this year. So I think, in a way, Trump is trying to spark a crypto frenzy, because seeing the combined market cap of all the stable coins grow by a couple of $100 billion would do the administration just fine. Thank you very much. Every $100 billion of crypto activity is $100 billion less they have to roll over themselves. And in order to keep a lid on the price of gold, I think Trump may be casting some doubts about whether the gold is in Fort Knox. In a way, I think it would backfire. I don't think they've thought this through, because I think the reaction would be, the reaction to the news that Fort Knox was empty would be incredibly bullish for the price of gold. But I'm not sure that they've thought that through. But one interpretation is, don't gold's the old pet rock. We're going for the new digital gold. Park your money over here, which is an indirect way of achieving the outcome of a financial repression, where you're basically forcing people into buying treasury bills. And so that's what we think is going on. It's a little bit speculative, but we'd like to indulge in some speculation on occasion.
Then moving forward in the gold market, if it's kind of the Trump administration, interestingly enough, wanting to suppress the gold price, do you see that being successful? Or because obviously it hasn't been since the beginning of the year, gold has continued to rise, and it seems like it's just an upward trajectory from here. But your take on where gold is heading, given if the Trump administration is trying to suppress the price this way?
Yeah, I mean, maybe not suppress the price. That might be too strong, but at least put a cap on an out of control gold price. Have it go up in a manageable way. I still own personally, and other members of the Doomberg team are heavily invested in gold. Such day-to-day price gyrations don't really change the fundamental purpose of my gold, which is a vehicle for savings. And a preservation of purchasing power across generations. And so I don't really look at the price of gold too much unless it's, going a little crazy, because ultimately I sort of dollar cost average in, like residual savings I'd like to park in gold. I buy some fizz, or I buy some solid gold for my own personal possession. And I think that mindset has treated me quite well as I've built up, my savings. Probably the first gold I bought was around $1,300, and just keep dollar cost averaging in and doing just fine. So I think depending on how peace is achieved, if peace is achieved, and depending what grand deal is struck with the Chinese and the Russians, assuming one gets done, I think there is a legitimate push, even if Trump undoes some of the sanctions and so on. I think it's kind of hard to close that door. The horse is long gone. People have seen that if even the whiplash of Trump undoing much of Biden isn't in fact a negative long-term for U.S., because people know we're always one election cycle away from massive change, and you can't plan for anything longer than 3 or 4 years. And so I think gold's attractiveness as a neutral reserve asset that can be used for the balancing of international trade is still growing, and ultimately, depending on how successful they are at cutting government and so on, things could get a little weak for the dollar. And so, as a hedge, as a preservation of purchasing power, gold still provides that service to me. But again, I think it's really important to not measure your wealth in dollars and how the gold price changes that wealth. I kind of measure that part of my portfolio in ounces, not to the extent that Michael Saylor, measures the value of strategy or whatever he calls himself now. But, similar mindset, acres and ounces as opposed to fiat currency when you're measuring your net worth.
No, getting back here to the speculation of gold revaluation, do you see any potential for that? And how might that impact the gold price if the U.S. was to revalue the gold in Fort Knox, maybe to the current pricing of gold?
I think it would be bullish. It would send a signal that gold is, in fact, returning to its rightful place as a neutral reserve asset, at least officially. It already unofficially is taking that mantle. I don't think Trump's going to do it for the reasons I outlined earlier. We've had a change of view in that regard. I think his number one concern is dealing with the refinancing wall, cutting government spending, and doing so in a way that minimizes the disruption. I noticed both his Treasury Secretary and he himself were out on TV warning about turbulence ahead. You could see the stock market has responded. I think Trump is putting the messaging out that he's going to focus on Main Street over Wall Street, and that any recession, which is bound to happen, by the way, now at this point, will be blamed on Biden, and hopefully things get cleaned up before the midterms. That seems to be the strategy they're going with. So revaluing gold when you're trying to convince people that there isn't a crisis of confidence in treasuries is probably not on the table.
As we're recording this on Monday, March 10th, we are seeing the Dow hit a new low we haven't seen since the beginning of January. Do you think that there is turbulence ahead in the stock market, and what might that look like going forward?
Yeah, well, I think we're in turbulence now, especially considering how for many of the sort of marginal investors or new investors, incremental investors, they've only ever lived in number go up and the Fed has our back and there's a Fed put. I noted with interest when Scott Bassett was on CNBC that he said there is no put, there's a call, which is a kind of a interesting turn of phrase. I think that caught a lot of veteran traders. It caught their attention. I noted with interest an interesting article that JJ at Market Vibes put out Sunday night in reaction to that moment. So yeah, I think, look, recessions are normal. In the long run, they're healthy. They're no fun to live through. Market corrections are normal. In the long run, they're healthy. They're not fun to live through. But if you keep kicking a can down the road, you're only stretching the rubber band further and further, which is just creating the violence of a snapback. And I think Trump is trying to have a soft landing in the hopes that all the other stuff he's trying to do, get investment going and all that kind of stuff kicks in time. And look, if he is successful in cutting government spending and dismantling even a fraction of the regulatory regime, the suffocating regulatory regime that is Washington, D.C., and we have a sort of creative destruction event where healthy companies survive, weak companies that should go out of business, zombie companies go out of business, the boom that would come on the other end of that is analogous to sort of what happened in the post-COVID cycle. We had a hard stop on the economy. The stimulus was applied, and then coming out of COVID was a boom of historic proportions, right? And so I think that's Trump's vision. Whether he can pull it off or not, whether he has the political capital to survive the friction of the transition remains to be seen. But that's where I think we're headed, yeah.
A lot of people that I talk to talk about how the stock market is extremely overvalued at the valuations we're at. We're heading into a recession. You look at these different factors that often predict recession, like the inversion of the yield curve as it uninverts, right? As it gets back to normal, then you typically see some sort of bust. Your take on that? What kind of impact would this recession have, and what kind of stock crash or correction do you see occurring?
Yeah, I think we're headed to a recession. I note that a lot of people are looking at the Atlanta Fed GDP Now tool and saying, wow, look at the contraction. And that is, I think, widely understood now to have been mostly an error that overcount. The impact of all of the imports of gold from London to New York was showing up in that model in a way that would not show up in the sort of standard measurements of GDP. But I think we're headed for negative GDP Q1, and I think we'll probably, have a negative GDP Q2. I think an underrated negative consequence of Trump's behavior is just the threat of sanctions has caused several supply chains to seize up. Like, who wants to hold the title of inventory that needs to cross the border? Who pays the tariff? You don't know on Monday whether you're going to pay a tariff on Tuesday, and you don't know last week whether you're going to be paying a tariff next week. And this chaos, which is a standard negotiating tactic for Trump, is having a real intangible drag on the economy. And I think people who sort of blindly put their support behind Trump without pondering those things might be offended by hearing that. But we have many contacts in industry, and based on our channel checks, global supply chains are ultimately a series of confidence-enabled, the baton handing offs between, one runner to the next, and confidence is really key. That if you're at the end of that line, that baton is going to get to you just in time. If as soon as you lose confidence in any part of the step, the entire, you could see, things begin to pile up. It's like a car crash on the highway. And so we're seeing that right now. I think it's real. We have, again, up and down the supply chain. When we do our channel checks off the record, what are you seeing? How's the quarter shaping up? So on. If we have a friend who works at, say, a plastics compounder, they have a pretty good insight into how the economy is doing, or somebody who sells at a Walmart, or somebody who needs to procure steel for part of their manufacturing process. It's all very clear that this tariff stuff is very disruptive, and how could it not be? That Canada and the U.S. have the largest, trading relationship in the world between two countries. Of course, if you slap a 25% tariff on most of the goods crossing the border, you're going to see a massive disruption, and that's what we're seeing. And so it's almost as though he's doing it on purpose to trigger the recession now, clean everything out, get the tariff set up, and come out for the boom. And their messaging is certainly consistent with that. So it's interesting to see how it all unfolds.
It is an interesting time. It is an interesting timeline, right? Because you saw with Reagan also, there was a recession to begin his presidency, and then he won almost 50 states in his reelection. So it could be an interesting strategy there if he's, getting us into a recession at the beginning of his term, and then he can brag about how he got out of it. But you've also talked a lot about energy in the past with us, and how the U.S. has so much natural gas, so much other forms of energy, that we can really be very independent and have an energy surplus. What do you think? Do you think Trump is going to be taking advantage of that as well? And if we do come out of this recession in a boom, how might energy play a role there?
Yeah, well, I think, his Secretary of Energy, Chris Wright, was just out saying we need more energy, much more energy. Robert Bryce, our friend of ours and a fellow Substack author, put out an interesting piece in that respect this morning. Trump wants $50 oil. And I note with interest that he's been leaning on the Saudis, and suddenly OPEC has decided they're going to go through with their production increases ever so slowly. Some would say they're just correcting for cheating, but it's still a pretty bearish sign to the market. Oil is still more expensive than natural gas on an energy content basis, although that gap is closing as we predicted. But like the price of coal, I think Newcastle coal is less than $100 a ton now. Natural gas is up here, about $4 a million BTU, but landed LNG in Europe is at about $13, is pretty manageable. I think the markets are very well supplied. Trump wants more energy. He's probably going to get it. And, that would be another bullish input into a recovering economy for sure.
Now, the name Doomberg obviously seems to be imply a pessimistic view, but has that changed over the time since you started the Substack, that maybe a more optimistic view is warranted?
No, yes, we are still sort of professional defensive pessimists in search of things to worry about in the headlines. But at the same time, I think we've become a bit, as we've grown and the project has evolved, and people actually pay for our services, we're much more interested in being right than driving clicks. We're all in the clicks business. I like clicks as much as anybody. But to build a sustainable franchise with subscribers that trust you, you need to have a very good hit rate of making big calls. And I think we've had a pretty good run in the past year. And our goal is to be right. And if the correct answer is to be optimistic about something, then we'll be optimistic about it. And if the correct answer is to be pessimistic about something, then of course it would be considered on brand. But by and large, the moment you go from a free publication to accepting people's money in exchange for work, ethically, we view that as a big step change in the professionalism that we need to be approaching this because it's our business now, right? And so, and if every time we publish, every time we go on a podcast, it's a test of our business. And we're hunters. We eat what we kill. So you do well, you haven't steak that night. And if a piece doesn't land, well, maybe it's baloney.
Now, moving forward here, then on the financial side of things, you do focus kind of really with respect to finances. So your perspective on that going forward, you mentioned gold is kind of a hedge, right, for a lot of people to continue to accumulate gold. But looking forward to the rest of the year, what asset classes do you see doing well in 2025?
Yeah, well, if we're truly headed into a recession and a bear market stock correction, even gold will get caught up in that downdraft, by the way, because during real, stock panics, people sell what they can, not what they should. I think our view is bonds should do well. I think yields are going to come way down. I think yield curve control temporarily to get through a recession. I could see Trump demanding the Fed sterilize any increase in the deficit because of the recession, on the promise that they're going to cut government spending thoroughly and close the deficit completely on the outside of it. And I think if that was messaged correctly, the market would be okay with that. So you add a couple of $1 trillion more to the Fed's balance sheet as opposed to shrinking it, and you sterilize the new debt that needs to get through the recession. I think we've been accumulating dry powder because we invest in the private markets, and we think there'll be some opportunities there. Because during downturns, even the good companies can struggle to raise money, and startups succeed for a variety of reasons, but they all fail for the same reason, which is they run out of money. And so that's we're kind of keeping our powder dry. We have our gold. Gold goes down a lot. We'll buy more gold. And if the right opportunity in the private markets present themselves, then we'll have the capital to take advantage of that.
Fantastic. And if our viewers are interested in learning more, they can go to Doomberg.com. Can you tell us a bit about that?
Yeah, all of our work's at Doomberg. We're publishing about 8 articles a month right now. Our commitment is 6 to 8. We might want to step that up a bit going forward. We're having so much fun doing this. Our pro tier, in addition to those articles, we have a 45-minute or so webinar once a month where we do a deep dive on topics of interest, mostly on energy, but other topics as well for our pro tier subscribers. Everything's there, Doomberg.com. Elijah, always fantastic, and looking forward to the next one.
Fantastic. Well, thank you so much, Doomberg, for taking the time today, and God bless.
God bless.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for March 10th through March 17th, 2025, while supplies last. First this week, we feature backdated 1-ounce gold Krugerrand at just $59 over spot. Next, Valcambi silver kilo bars are just $2.20 over spot per ounce. Pre-65 mixed junk silver is just $1.99 over spot, and pre-65 half dollars are just $2.25 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.